Hello everyone. In the present day, we know about the current situation of Dubai and oil between the Iran and America, right? So if India enters a oil situation tomorrow, what will happen on the stock market? Will the Nifty crash? Will investor lose confidence? Or will the market recover like it has in the past? Today we will understand how the Indian equity market behaves during oil situations, right? So based on the history, data and economic logic. Whenever oil news or military tensions break out, the first reaction of the market is fear, right? So investor panic, foreign investors may start pulling out the money from Indian market, and the Indian rupees can weaken. You mean the you have paid the more Indian rupees to buy a $1, right? So crude oil price may rise sharply, and this directly impact benchmark indices like Nifty 50, BSC Sensex. Let's look like at the history. During the 1999 Kargil war, Indian markets initially react negatively, right? There was uncertainty and volatility in the market. The market recovers after the initial shock. Similarly, after the 2019 Pulwama attack, so market saw short-term volatility, but there is no long-term structural damage, right? So basically, what happened in the short-term market? Markets may correct by 3 to 10%, experience high volatility, see pressure in banking, IT, aviations, and infrastructure stocks, right? So why does this happen? Because India is a major oil importing country. If oil price spike, it directly affects inflation and the current account deficit. Remember that. So now we will discuss sector-wise impact, right? So defense sector, if you know the defense sector, potentially should be positive because defense companies may benefit due to increased government spending. uh, Examples including Hindustan Aeronautics Limited, Bharat Electronic Limited, oil and gas liking pressures. High crude oil price can be negatively affect oil marketing companies and increase inflationary pressure on the economy. Gold may be safe in way as a asset during a uncertainty. Investors shift the money into the gold, and the gold price often rise during the such times. And FMCG and pharma defensive sectors. Consumers will continue to buy essential goods and medicines regardlessly of where. These sectors may remain relatively stable compared to cyclical industries, right? So then long-term investors may even find opportunity during these corrections, right? Remember that market do not move permanently on fear. They move on fundamentals. So yes, oil can shake the market, but does not necessarily break it, right? Okay, keep investing and keep safe.